Now, once again, the three types of market conditions we can look for are range, breakout, and trend. I color-coded these for a reason. Breakout, red, you would expect some high-level volatility and some action. That's exactly what we look for those kind of circumstances. Now, I know most of us would be looking for breakouts right now, but that might not necessarily fit the conditions that we have. All right, it's actually pretty hard-pressed to find a really good-looking breakout that fits all the necessary requirements. We also have ranges, and ranges are cool blue. As conditions typically hold up, technical levels hold up, and you have pretty consistent and quiet activity. And then trends, also quiet, but there is progression. All right, we have a development one way or the other. So what makes these individual market types or trade types, and what are the opportunities that we're seeing right now? All right, so we'll start with the more active or more current and high example count in range. While range is not necessarily as exciting to many traders, most of us look for breakouts or really aggressive trends in general. Retail traders or speculators look for the most activity and try to exploit it because they see their profits as coming faster. Most of the time, ranges are the easier trade type to actually approach, to actually trade, all right? Because it is the level of consistency that we see in market activity, which we see in low and steady volatility, that makes these higher probability events. Furthermore, when we have these flat trends and clear technicals, we know where to position. We know how to position. All right, and to make a range trade really work that's a market condition and a technical condition, you need the fundamental condition to complete the picture, and that's very important. You have to have limited amount of event risk, all right, scheduled data on the docket that can stir price action, but also limited fundamental development on the underlying themes. So if I'm looking at a yen cross or equities, I have to look at steady risk trends. Or if I'm looking at, let's say, the US dollar, I need to look at limited interest currently in taper speculation, which is something we actually see. So who are the good-looking currency pairs for the range scenarios? Well, the number one actually in my book is the Euro USD. Now, depending on what time frame you're at, you say, wait a second, we have a really strong trend to the upside. That's what you would see on a 4-hour chart or an hourly chart. Or if you're looking at an hourly chart, you can also say that this is a trend that looks like it's testing a potential for a breakout. It might seem to have those circumstances, but I'm looking at this on the daily chart. All right. Now remember, you can find different setups, range, breakout, or trend, depending on what kind of what time frame you're on. It very much depends on that time frame. But looking at the circumstances for the Euro USD, is volatility high? All right. Easy thing we can do with any of these, you can apply a volatility indicator. The easiest one, most accessible one to us is the average true range. All right, so let's pull up the average true range. How active are these markets? Not very. All right, you can see the ATR is extremely low. This might eventually lead to a breakout and oftentimes extreme low levels of volatility do lead to a breakout. But for now, you don't have the volatility. You have clean, clear technicals, this much larger wedge formation, which is going to be very difficult to break, especially to the upside. You have this rising wedge formation here, difficult to break unless really driven. And you have the nice congestion that you've had over the past few months. Right? Fundamental event risk, there's not really much on the docket. Right? Especially in the coming 24 hours, we've already passed much of the U.S. and European-based data through this week for Thursday's session. The final 24 hours of the week don't offer very much. There is some highlights next week, but nothing that we would say is a non-farm payrolls or a FOMC rate decision or a ECB or European GDP figure. Those kind of indicators aren't on the docket. So all told, the Euro USD looks good for the range trade. You just need to be able to find the right entry points. All right, we're not going to talk about entry points just here. I might discuss a little bit in today's trading video, but this has the general circumstances for a range. What other pairs can we look at for good potential on these circumstances? Euro pound, very much similar situation. Low level volatility. We have very consistent technical levels, though there is a descending quality or a descending bearing to this currency pair, it's still relatively consistent. I would still group this in a range. Furthermore, you can see that there is relatively little fundamental event risk. Now, while we do have a lot of speculation surrounding the Bank of England's rate decision going forward, it's not necessarily very active. We haven't seen the market take up that fundamental concern and run with it. And you pit it against something like the euro, and that fundamental concern is significantly muted because this is a relatively stable pair by virtue of its historical fundamental themes. And then, of course, you have the nice technical bearings that you can play towards. We're in the middle of that range right now. It doesn't offer very good subs as of right now, but you can see the bearings. And then the last one that I was looking at, I just wanted to highlight 3 from each, the Kiwi USD. Now, normally we call this a very risky currency pair. It's a carry currency, but it doesn't necessarily reflect a lot of the risk appetite trends we're seeing in whether we're talking about the S&P 500, whether we're talking about emerging markets. It's not following that suit. All right? And if you want to talk about technicals, you can look at it long term, you can look at it medium term, you can look at it even to some degree short term. This is pretty much flat. All right? Clear technical levels, ability to play it. What are the fundamentals? Well, we might eventually have the RB and Z rate decision to worry about going forward, but that is not necessarily our concern just yet, all right? Because that's still a little bit further into the future. Now, what about our second type, breakout? The breakout is extreme low or extreme high volatility. We just saw the Euro USD had extreme low volatility. It might turn into a breakout, but we need other factors to help it along because those technicals otherwise are going to be difficult to overcome. Your breakout will also have flat trends, but it'll take advantage of those flat trends and clear technicals as we see the break, and that encourages the move and continuation, the follow through. And then, of course, you're helped along. It's not necessary, but it's helped along by high-level volatility through event risks. All right. So if we have, let's say, non-farm payrolls that can spur action, that provides that catalyst necessary. Now you can see here I place this as an R because that's similar to the range conditions. It's essentially a range opportunity where the probability of moving beyond those technical boundaries is higher, either because the volatility, the market conditions are picking up, or because there is something on the docket, an event risk, that can help it along. So what's a good breakout scenario right now? What's looking good for this type of setup? I think the pound dollar is perhaps one of the more interesting ones that I have. You can see at the top of this, we're in a general rising trend channel. Some would call this a range, some would call this a trend. I think this is actually better for a break potential in the shorter term. If you see to the downside, we have this previous swing high, which is around 166.25, 166.50, and to the upside, you have this very significant level at 168. This is a long-term fib, 50% fib retracement. These are the kind of breakout circumstances that you can see a short-term play out, but also a medium-term play out. Now, the interest here is that the fundamentals, all right, might not seem like we have a lot of big high-level ticket data on the docket, but in reality, the themes that really are important to the market risk trends, which is kind of muted here, but monetary policy, the divergence between the two, the pound and the dollar, is so severe that, or the competition between, I should say, is so severe that this can easily be exploited, unlike a euro pound. All right, so I'm looking at the 168 level, 166.25 levels. If we get a break through that, and it's accompanied by something along the lines of a volatility pickup or a kind of a news item that suggests that the taper is picking up or that interest rate expectations in the UK are going to increase, then this is something that really looks like a good and capable breakout. The other breakouts that I want to look at can be encompassed in a general currency type. All right, so not just the dollar yen, but the dollar yen definitely has breakout potential. But I'm also talking about the yen crosses in general. We can look at the dollar yen. We can look at the euro yen. This is a 4-hour chart. Nice wedge formation. You can look at the pound yen, which has its own appeal to it. All right, this is actually a a currency pair I'm still short, and I'm short the second half. I took the first half profit already. And the same can be said about the other higher yielding currency crosses, Kiwi yen, Aussie yen, CAD yen. Now, the circumstances surrounding these. The volatility has been oscillating aggressively, volatility of volatility, and that is a good sign for a breakout potential. And the recent drawdown in volatility, the recent quiet, looks like a quiet before the storm kind of circumstances. The fundamentals are easy enough to track here. There is a exceptionally good correlation between the yen crosses and risk trends. So the yen crosses, and let's say the Nikkei 225. And we know how unstable risk trends are. It has been oscillating back and forth, back and forth. Now, this does not necessarily denote a bias that we should immediately take, but we do know that there is a good chance that we can break one side or the other. All right, so the yen crosses are fantastic breakout candidates, and I'll be taking a look at those going forward. And the third type, of course, we cover the range and breakout. We also have the trend. The trend can be compared to the range. You can see that we have two similarities between this, the steady volatility and limited fundamental event risk, all right, although the event risk isn't necessarily as important to trend. But you must have a steady trend. You can have nice, clear technicals and trend lines, but it's not necessary. What you do need, though, is a drift, a bearing. That bearing can actually be it can be up, down, and also flat. So you got to be very careful about that. What differentiates a trend versus a range? That is semantics, really. It's about the level of the term and length. All right, but I could call the euro pound, as we talked about when we were looking at as a range, a trend as well. But realistically, I think that it does still fit the range category. So what is a good trend right now? I think perhaps one of the best that I've seen out there is the dollar CAD. Right? This dollar CAD, while it has had some shorter term volatility and shorter term correction, we had this massive breakout earlier this week, which we were following as it built up that pressure and eventually got that break. But this, in the medium term to long term, has been a very consistent trend. It's the nature of this currency pair, like a euro pound, like a euro Swiss, like an Aussie Kiwi, that this moves in pretty consistent patterns. All right? Why? Because the Canadian and U.S. economies are each other's largest trade partners. So the health of one typically spills over to the health of the other. This helps to stabilize this currency pair, and as you can see, the trend is quite consistent. Right? Taking advantage of pullbacks in such circumstances is preferred. And as you can see, that's exactly what happened here. The Euro Swiss, as I mentioned as another example, is another good trend, although this one is flat. All right, you can see here this one has been flat, and it will remain flat as long as it is anchored to this 120 floor, because there is a necessary floor down there, and there is some level of holdover of risk on, risk off to this currency pair, the Swiss franc being the safe haven of the region. But like the dollar CAD, this has a kind of mute because of the fundamental connections between two currencies. So taking advantage of the technical patterns, although remember this is not as consistent as a range technical pattern, so you have to be a little bit more acclimated to setting wider stops just to be careful. This has good opportunity on this perspective as well. And I think one of the most famous and disputed and frustrating, if you will, trends out there is going to be the the S&P 500. We've been talking about this one for a long time, and I think most of you know at this point my expectations going forward. I think this is well overdue for a reversal. However, it does not necessarily have to reverse just because I think it does. All right? And if I want to put it into context, the volatility levels are relatively low, something that we watch on the VIX indicator often enough. So referencing the VIX compared to the S&P 500, I flipped it upside down. You can see level of volatility still low, maybe extreme low, and that's something to take in consideration if we get to a breakout. But the break itself has to get us near a meaningful technical boundary, and we have to see those fundamentals pick up, but they're not doing that. All right, so we have low volatility, the fundamentals. We've gone through taper, we've gone through employment figures, growth forecasts that are fading. We've talked about financial potential hotspots, including the emerging markets, and all of this has been weathered. All right, so fundamentals have been tested, and they're starting to cool off a little bit. Then we also have clear technical levels. All right, so this has all the trappings of a very, very strong trend. Now, it eventually does come to an end. This upswing here is already starting to fall apart, but in the medium term, it's hard to argue with that until we get some clear, consistent breakout indications. All right, until you start to see 1740 give, until you start to see the market deleveraging in a broad way across all asset classes, this trend is well entrenched. All right, so. Remember, there are 3 different types of trade conditions, market conditions, and that's range, breakout, and trend. Now, we oftentimes just say this is a range market, or this is a breakout market, or this is a trend market. It's true that under certain circumstances, you will find most of the examples that are trade-worthy out there will fit into one of these categories. However, depending on your time frame, depending on how far you look, you can always find a trade opportunity in any one of these 3. All right, so take a look through all your charts and take a look at the economic calendar. See if you can identify a range, breakout, or trend setup across the markets right now. Hope this helps. In the meantime, good luck trading out there. We'll do our next strategy video tomorrow.